Mortgage interest rates dropped yesterday, but annual consumer price inflation accelerated in October to a 6.2% rate. This is a 30-year high. What does this mean for you and others looking to purchase or refinance a home? We will tackle this question starting right now. Hello and welcome to Ask the Lender. My name is Ferrier. I am a licensed loan originator as well as a U.S. Navy veteran. My objective is to help individuals and families eliminate debt, improve credit scores, reduce the amount of money paid in taxes while building wealth in real estate. If you or someone you know are looking to purchase or refinance a home, the good news is that mortgage interest rates dropped yesterday. Stick around until the end where I share exactly what they are on average nationally. Right now, the elephant in the room is inflation. The 6.2% increase in the annual consumer price inflation, along with a core inflation rate of 4.6%, are both 30-year highs. To put this in perspective, this was in 1991, and I was a senior in high school. George Bush I was president, and the Gulf War had just begun. During the Federal Open Market Committee meeting on November 2nd through the 3rd, the Federal Reserve announced that it intends to begin paring back its bond purchases. Now, this is a process known as tapering. The Fed has been buying $120 billion a month in treasuries and mortgage-backed securities. It will pare back those purchases by $15 billion a month starting later here in November. Many observers believe the Fed will begin to raise interest rates from near zero levels to maybe 2 times in 2022. When people talk about the Fed raising the interest rates, they're referring to the federal funds rate, also called federal funds target rate. The federal funds rate acts as a reference for the interest rates big commercial banks charge each other for the overnight loans they exchange with each other to maintain the level of liquidity the government requires they maintain. When the Fed raises the federal funds target rate, the goal is to increase the cost of credit throughout the economy. Higher interest rates make loans more expensive for both businesses and consumers, and everyone ends up spending more on interest payments. Those who can't or don't want to afford the higher payments postpone projects that involve financing. It simultaneously encourages people to save money to earn higher interest payments. This reduces the supply of money in circulation, which tends to lower inflation and moderate economic activity or cool off the economy. So let's look at how this applies to a 1% increase in the Fed funds rate and how that might impact the lifetime cost of a home mortgage loan. So take a family shopping around for a $300,000 30-year fixed rate mortgage. If banks were offering them an interest rate of 3.5%, the total lifetime cost of the mortgage would be approximately $485,000, with nearly $185,000 of that accounting for interest charges. Monthly payments would clock in around $1,340. So let's say the Fed had raised interest rates by 1% before the family got a loan, and the interest rate offered by banks for that same $300,000 home, that mortgage loan is now at 4.5%. So over the 30-year life of the loan, the family would pay a total of more than $547,000 with interest charges, accounting for $247,000 of that amount. That's just the interest. So their monthly mortgage payment would be approximately $1,520. Who do you know looking to purchase or refinance a home? Make sure to connect us together while rates are still low. So here's what you can expect rates to look like today. On average, the 30-year fixed rate is 2.9%. A 20-year fixed is 2.71%. A 15-year fixed is 2.29%. A 30-year FHA is around 3.01%. And a 30-year VA loan is 2.4%. Of course, the rate that you receive depends on your credit, your down payment, the location of the home, and the loan size. So please reach out to me to learn what your rate might be. If you have found this information helpful, do me a favor and subscribe to my channel, making sure to click that bell right there to get notified when I post more helpful videos just like this. See you next time.